Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Tuesday, July 8th. Firstly to the S&P 500, continuation of the trend to the downside, a candle that's made a lower high and a lower low, and a very nice extension to the size of the black body. And this is the way that you want to see trends develop. No bias here whether they're up to the upside or the downside. A very nice extension of the range, meaning that as the trend is beginning to develop, we're starting to see the sellers gain downside momentum, and this suggests that we could see this market testing to lower levels. It is a sign of a healthy trend, and albeit to the downside, so not necessarily good if we're long the S&P 500 or long stocks. This is probably just a temporary pullback, and we are seeing some support coming in around the Tenkan-sen indicator, trading at 1965, roughly 1964. And we did see the market close just below there in a fairly strongly bearish manner, with the sellers taking control. We did, however, see the sellers lose some commitment, as evidenced by the small shadow, but certainly not of any great concern for the sellers. Obviously, it seems as though this 1955 level is starting to come into play, and we may see some support coming in around that area. And then at the Kijun-sen indicator 1950, and that will be a crucial area to this market. If the sellers are strong enough to trade down to the 1950, we need to watch how the market reacts around there. If we trade out through there in a bearish manner, we could quickly see the market trading down to 1925, but we still do have a bullish market in the longer term time frames and in the medium term time frame, and that's supported by the Chico span, saying that the momentum in that longer term time frame is up, and it's supporting the bullishness that we're seeing. So only a minor pullback, or a possibility of a minor pullback, that we're seeing at the moment. Now, in terms of the Fibonacci extension, and here we've seen the market test to the 100% level and be rejected from there. So that could be significant. It's a very important area, and the rejection from there could be important. But looking at the short-term dynamics of this candle with a nice extension of the downside momentum, it does suggest that there is a possibility of this market trading through there, but we need to watch how the market reacts in the next candle. Now, our next target here is the 161.8% level, 1947, coinciding just with that Kijun-sen support. So around the 1950 to 1947 level, we should see some strong support coming in, and that coincides just with that swing low that was made a couple of weeks ago, which is at 1945. And the Fibonacci retracement of the prior first time frame uptrend sees the market being rejected from the 61.8% level, a very significant level. But as I've mentioned, the bearishness in this candle certainly doesn't suggest that we will see a change of trend here. There is a possibility of it happening, but certainly no inclination that it's going to happen. So there is a good possibility of the market testing at least to the 78.6% level, or down through there to the 100% level, which coincides with that swing low already mentioned. Now, another thing to watch for here too is the trend line that began back in mid-April and went through intersected with the trough in late May, and is now just below the Kijun-sen indicator and just below that swing low around that 1945 level, where that's around 1940 at the moment. So that will be some important trading if the market does get down to there, and any breach of there in a bearish manner will signify that this trend that we've seen in force for quite some time, for a couple of months, may be in danger of ending. Now, the real possibility of a change of trend there will probably only be in that medium term time frame, and we would expect that support should come in around the Ichimoku cloud, and we see that these other trend lines will offer support around the top of these Ichimoku clouds if the market does trade down there rather quickly. But it's certainly not a realistic opportunity for the market to trade that far in such a short space of time. Next, moving to gold futures, and here we see more indecisive trading, the third consecutive spinning top or doji type candle, suggesting indecision, a change of trend to the upside, but such indecisiveness that we're not expecting to see any great follow through. We still should be on the lookout for it. 1329 offers itself as very strong resistance, as it has in the past, and here we have the market trading outside of the Ichimoku cloud, which is supposed to be bullish in the long term time frame, but this is where we don't look at what's happening with the Ichimoku candles just by with the Ichimoku charts by themselves. We have indecisive trading outside of here. We're not confident in this giving us a strong indication of bullishness in the long-term time frame. What we want to see is bullish activity to confirm this bullish trading outside of the Ichimoku cloud. So it looks as though any follow-through that we're getting to the upside is really not going to establish itself very soon, and any strong follow-through to the downside is going to find support at 1309. So a very indecisive market and forming a congestion area that looks as though there's a possibility of it forming something of a small head and shoulders pattern. Now obviously any head and shoulders pattern that's established and confirmed would have this strong support down around here, around the 1300 round number, and then below there down around the Ichimoku cloud. But certainly not a good market to be trading. A lot of confusion in that short-term time frame, whilst the market is still bullish in that longer term and medium-term time frame. We still do not have any solid bullish trading as far as the candles are telling us. Next, moving to NYMEX oil, and here we see a continuation of the trend to the downside today. Now, even though the buyers were strong enough to take out the previous high, the sellers still were strong enough to take out the previous low, and that's what we call an outside day in bar chart terms. And because of this strength from the buyers and the strength from the sellers, it causes indecision and it raises doubt about the continuation of the trend to the downside, because we have a different configuration than the series of lower highs and lower lows in the previous candle. We also have a change from a black body to a white body, albeit a small white body, but it does suggest that there has been something of a shift in momentum in net terms from the sellers to the buyers in a minor way, and that could be significant. So we will be looking for a potential higher high and higher low. The market found support at the 103.39 level once again for the second consecutive trading day, so we are looking for buying to come in. A minor area of rejection around this 104 level that we saw for the previous two candles, so that will be an important area to breach and to close above. But if we do trade up to higher levels, the area around the Kijun-sen and Tenkan-sen trading in the same place around the 104.60 level will most likely hold as strong resistance, and that coincides pretty much with the swing highs from the recent past. If the buyers are strong enough to close up through there, then we would potentially have a change of bias in that medium-term time frame and the fast-term time frame, and that would be in line with the market being bullish in that longer-term time frame. So we will be looking for that. And just looking here at the Chica span, we now have confirmation of some bullish activity on the Chica span, so potential for the market to trade higher, but certainly still very strong resistance for the market to break out of, to give us some confirmation of potential for higher prices. Next, moving to wheat futures, and here we see a continuation of that trend to the downside. Very, very strong downtrending price action in terms of the first and second time frames. The range of this current candle that's finished developing is very much less than the previous day, suggesting that sellers are certainly not as eager as they were. That was an extreme trading day for the previous day, so it's little wonder that we have seen the sellers take something of a rest. Markets find it very difficult to be up for a long time, or for the sellers to be up, or the buyers to be up, and I mean for them to be strong. But the important thing here is that we have continued with a lower high and a lower low, and the sellers have taken control by the close of trading by closing down towards the low, and that suggests there is a possibility of the market trading to lower prices. Now the worrying thing here, however, is the large reduction in the size of the body of that candle. So even though it was an extreme day the previous day, the reduction in that body size has been too extreme, and it suggests that the sellers have lost a very large amount of strength that they had in net terms, in net momentum to the downside, and suggesting a possibility of a change of trend back to the upside. But what we need to do here is we're getting mixed signals with the short-term dynamics in the candle, the balance of the buyers and sellers, and there's a little bit of doubt about the strength of the sellers here. But what we want to do is confirm that there is going to be continued downside, so watching that low very, very carefully for a potential lower high and lower low. And if we see the sellers come into this market early, we could quickly see wheat futures trading down to the 526 level. There isn't any major support until the market trades down to that area Now we do have a bearish market in all three timeframes, confirmed by the Ichimoku charts and confirmed by the Chica span, which is below the corresponding price action and below the cloud. So very, very strong negative trading here with wheat futures. Any bounce here is likely to find support firstly at 575, strong support around there with the Tenkan-sen trading there, or at 590, and strong support, strong resistance there at the 590 level as well as the 575 level, with the Kijun-sen trading around that area. Moving next to the US 30-year bonds, and here we've seen some solid follow-through following that strong bullish candle that bounced off the bottom of the Ichimoku cloud, and a change of trend today with the candle making a higher high and a higher low, and a very nice extension to the range of the candle and a very nice extension to the size of the body of the candle. The buyers have closed with control. They've shown strong commitment, and this is a very good attempt at the buyers to build momentum, and also a bullish close outside of the Ichimoku cloud, giving us a bullish market in that longer term time frame. Now, if you recall, what's happening in a lot of markets lately is that we're seeing these breakouts and these closes, but we're not seeing follow through. What we want to see now is some bullish follow through to give us greater confidence in this move, and that would mean a strong bullish close up above 136.31, and I suggest that if we see a strong close up above there, we could see the market at least testing to the 137.25 level. If the market does come off, potential now for support at the top of the Ichimoku cloud, and then down at the Kijun-sen and Tenkan-sen around the 135.27 level, and also at that 136 level, so we have some very strong support below. In terms of the Chica span, it's not supporting the bullish breakout that we've seen and the bullish activity above the Kijun-sen and Tenkan-sen. But if we do see this market trade higher and close up above the 136.31 level, it will mean the Tenkan-sen will be above the price action, and it will confirm the bullish activity and suggest then that the market may be building some solid momentum to test to higher levels. Next to the S&P 500 futures on the hourly charts, and here we've seen how the market opened up below the Ichimoku cloud for the previous day's trading, and we looked at this yesterday, and there was a very strong suggestion that we were going to see the market trade to lower levels based on this trading below the Ichimoku cloud, the market attempting to rally to the cloud and then being rejected from there. Throughout the trading day, we saw the market finding resistance at the Tenkan-sen indicator, and that happens very often when we have a market with very strong downside momentum in that fast-term time frame. Throughout the trading day, we then saw the market sell off very strongly and almost tested the third pivot point level, which is quite an extreme, and now attempting to rally. The important thing to watch here is that for the start of trading for this new session, we have seen the market open up above the Tenkan-sen. Not very strong trading, and it's not a very active time for the market, but it may be significant. So we should be watching the area at the middle pivot point level around 1961.35 and at the Tenkan-sen just above there at 1961.75 to act as resistance. And if we see the market break up through there in a bullish manner, we could see the market trading to the first pivot point resistance level at 1969. Now, the market will then have an opportunity to break through the Ichimoku cloud if the buyers are strong enough and change the sentiment in that longer term time frame. But if we leave it until later in the day, we can see here that the first pivot point support level will actually meet the bottom of the Ichimoku cloud, strengthening the amount of resistance around there, and the depth of the cloud becomes slightly larger. So as we get later into the trading day, into this trading session, we will see the amount of overhead resistance actually strengthen. But the opportunity is there early in the day for the market to trade up through there, but it all depends on how the market reacts to the area around the Kijun-sen and the middle pivot point level. Now, if we see the market tested there and the sellers come in strongly, watch the Tenkan-sen at 1957 for support. If we trade through there in a bearish manner, we should reach the target at 1951.87 for the first pivot point support level, and even perhaps beyond. But the important thing here is that we are still trading below the Ichimoku cloud and the Kijun-sen indicator. So the market is bearish in that longer and medium term timeframes, with the Chica span confirming that bearish activity, the negative momentum, and suggesting that the likely scenario here is that the sellers could come in around this area and then we trade back down to lower levels.